Have you ever wondered why some tax sale investors succeed wildly while others fail miserably? The truth is, this business is not for the faint of heart. Mistakes can be very, very expensive. Bad habits and laziness can completely derail your success. Today, I want to break down some of the most common and costly pitfalls that will ruin your tax sale business and, of course, how to avoid them so you can begin building a stronger, more sustainable tax sale business. First off, if you are new here, my name is Casey Dimon. I've been investing in tax-defaulted real estate for more than 22 years now. I started at age 18 from scratch, and I've gained lots and lots of very valuable experience over the years to teach brand new tax sale investors through my videos, podcasts, tax sale playbook, and the Tax Sale Academy. All right, now before we get to those common costly tax sale mistakes, I want you to understand the whole theme of this podcast and truthfully this business. So in the tax sale business, relying too much on other people is going to be the fastest way to fail. The overall theme of this episode, of course, the overall theme of what I do is learning to do stuff yourself so you can rely on yourself. You don't need to go out there and put all your trust, all your money into other people. Rely on yourself and utilize the right tools in the right way. If you are lazy, you will fail. I know it sounds harsh, but if you expect others to do all the heavy lifting for you, you are setting yourself up for financial disaster. Success in tax sale investing comes from understanding the process yourself, from gaining experience, and then consistently refining your approach. If you master all these things, you will be successful, but it takes time. It takes you putting in the work. Nobody else can do that for you. Yes, others can teach you. Others can guide you. They can mentor you. They can help you take the smart shortcuts that they learn from their screw-ups like I do. But trying to shortcut your way out of learning the business altogether, that's a recipe for disaster. As we go through this episode, they become evident as I show you the key mistakes that many investors make by depending too much on the wrong tools, the wrong services, and the wrong people without knowing themselves what they are doing. And of course, I'll help you avoid those same mistakes. First off, right out of the gate, never, ever trust automated algorithms that pull information from county records like size, dimensions, and get this one, the most important one, the automated valuation. Relying on automated valuation tools like Zillow, Redfin, Realtor.com. People love to do this because it's such a very fast way to get some sort of number that's attached to the property. They tell me all the time, but I saw on Zillow it is worth this much money. Those platforms can be a helpful starting point because they're tremendous technology when it comes to mapping, finding properties, finding comps, that kind of thing. But you need to verify all that information. Never, ever rely on those tools alone. When it comes to those valuations, I'm going to give you an example that's right at the top of my head. Last week, I sold a lake house for $495,000. The Zillow estimate of value for that house, $182,000. That's pretty far off. Now, that's conventional real estate. That wasn't even a tax sale property. When we apply this to tax sale properties, the numbers just are so far off, it's almost comical. Because tax sale properties often have unique circumstances that those automated algorithms simply cannot account for. You must remember, these are computer systems. It's not an actual person sitting behind that screen comparing comps and looking at other factors, trying to decide a value that then you can go out and use. It is literally a computer algorithm and leaves a lot to be desired. The condition, location, the market, and all sorts of other factors are not going to be considered when they give you those estimates of value. If you want to be a successful investor, you need to learn how to value the properties yourself. Yes, you can use Zillow and Realtor and all those websites as one of many tools, but do not use it as the only tool. Stop trying to shortcut learning how to actually value real estate because that is a very, very important skill as a real estate investor. Study comparable sales in the area. Evaluate the neighborhood. Factor in things like condition, repair costs, that kind of things. Automated tools cannot do that for you. Learn to do it yourself. The next one is relying on photos that you find online. Now listen, things like Google Street View or random photos that you find on a property, that can be very, very valuable information as a starting point. But that's about it. Do not get me wrong, right? I use Google Street View on just about every single property that I purchase if it's available in that area. It can give you a quick look at the area and kind of gives you an idea of what's around it. But here's the problem. The images that you see on Google Street View or any random old listing photos and stuff like that of the property you're thinking about buying, they could be years old. And even if they are recent, they could be outdated compared to the current property condition, because property conditions for tax sale properties can change rather rapidly, especially when a property is set ablaze, for example. Now, I've seen situations where a property looked great on Google Street View, looked great in old listing photos from 3-4 years ago, but in reality, that property was gutted, or it's even been demolished entirely. Imagine spending that nest egg that you've been saving up, and you drive by the property that you're so proud of purchasing, and the house is completely gone. I've actually made that mistake. I write about it in Tax Sale Playbook. It is not a fun experience. I can promise you that. The solution, of course, is to verify everything about that property in person or hire a local scout. Yes, it is an extra step. Yes, it does cost a little bit of money, but it is far cheaper than making a horrible, horrible investment you will regret later. Let's talk about the next one, which really irks me, and that's using inaccurate property tax sale lists. Let's talk about those lists for a second. It's a very, very common mistake that I see new investors make. They want a shortcut to getting access to tax sale lists, so they pay a third party. First off, this is stupid. There's no reason to pay a third party to provide you that list that is completely free. Don't be so lazy that you want just one central place to see every property that's coming up for a tax sale, because that information is often very, very inaccurate if you can even access that type of information. Do those companies exist? Yeah, they do exist sometimes. Often they're fly-by-night companies that go out of business very quickly, and I don't really recommend any of those providers, because all they do is they take information from the county, recycle it, and then sell it to you. And in that process, a lot of times that information is not pulled accurately. Or even worse, they try to provide just a little bit of extra information that is inaccurate and cause you to make horrible investments. Always, and I mean always, get your list directly from the tax sale source. Most oftentimes, that is going to be the county or the municipality where the auction is taking place. Now, sometimes these counties, these municipalities will contract with an auction company, and the auction company will handle the sale for them. Even when you get that list directly from the auction company, verify everything on that list. Some of these auction companies will provide you things like photos, descriptions, even estimated values. Now, those can be very valuable resources, of course, but you must remember their goal is not to protect you. Their goal as the auction company providing all this marketing information to you is to sell that property for as much money as possible, because most of the time, they're going to get a percentage of that sales price. So their goal is to sell that property, and they can increase the bids on those property by providing this information to you. But they take zero liability. That liability is on you alone. So my suggestion is that once you have a tax sale list, you use the legal descriptions and the parcel number to conduct your own research as if anything that was provided from that auction company does not exist. Now, if they did a good job, all their information is correct, fantastic. But again, the liability to prove that is on you, not them. The responsibility to verify all those details falls on your shoulders alone. If you rely on somebody else's work without doing your own due diligence, you are essentially gambling. And truth be told, I don't trust anybody with my money. The one person you want to trust with your money is yourself. Bet on yourself, not somebody else. The next one, kind of on those same terms, and that is blind trust in third-party services. And this is a big one. It really breaks my heart every time that I hear about it, and I hear about it quite often. There are companies out there that will promise to make real estate investing easy by providing property reports, lien searches, and all sorts of other information. But here's the catch. Many of those properties, again, are using automated systems that pull data from public resources and they resell it to you. A lot of times that data is incomplete or inaccurate. Just last week, I received a message from a viewer who paid a third-party service to search the title of a piece of property she was interested in buying at a tax sale. She wanted to know whether or not it had liens on it that she would inherit. When that search came back, it said, nope, there are no liens against this property. She ended up buying that property. And guess what? She got stuck with a $150,000 lien. Now, again, that company that she paid $50, $100, whatever it was to, they have zero liability. Now, I don't blame her entirely because she did have good intentions. She knew she needed to search the title. Unfortunately, she went about it the wrong way. So if you're going to rely on those services, use them as a secondary tool, not your primary source of information. Learn how to perform all of the due diligence yourself. The next one is overusing AI without understanding the tax sale business. And I get it. AI is everywhere right now. It's an absolutely amazing tool. I use it in a few different things that I do, and I suggest that you use it as well. It can be an incredible tool when you know how to use it properly. But I've had multiple people tell me things like, but ChatGPT says this. To which I respond, well, ChatGPT has not been in the trenches of the tax sale business for 20 years, and ChatGPT is absolutely incorrect in this scenario because I've seen it played out hundreds and hundreds and hundreds of times. Listen, it doesn't know the quirks of each jurisdiction. It cannot account for the real-world nuances like changing market conditions, unpredictable property situations, and all sorts of other strategy-based investments. AI can help you review some things related to tax sale investing, like perhaps the laws or the procedures or the basics, but it is not a substitute for learning. It is not a substitute for your knowledge, for your experience, and for your hard work. Use AI wisely, but do not let it replace the fundamentals of this business. Because again, AI does not care that you lost money. AI is there to help you. It can be a tool, but it is not the be-all, end-all when it comes to the tax sale business because I've seen it be wrong many, many, many times. Next one, neglecting local laws and local procedures. Every state and often every county has its own set of rules for tax sales beyond just whether it's a deed, redeemable deed, tax lien, hybrid estate, whatever it is. You must know the specific process behind each one, both on a state level and a local level. Every state has their own little nuances that you must take the time to learn, but every county also has their own little set of rules. And of course, you can take the time to learn these by reading the frequently asked question pages, the processes, procedures page that they might have on their website, and the rules that they have for their tax sales. For example, in some areas, you might have to register a week or two in advance. Now, if you show up on auction day ready to register and they don't let you, that's going to be a very hard lesson. So if you don't take the time to understand the rules where you are investing, you could end up backing yourself into a very serious problem that you might even had no idea that existed in some scenarios. Maybe it is noticing requirements. Maybe it's the eviction or ejection processes. Maybe it's a fee reimbursement structure for tax liens or redemption periods, deadlines, or local property-specific ordinances or laws. Whatever it is, take the time to learn both the tax sale laws in the state you are investing in and the local laws that will apply to you as a tax sale investor. So, to sum it all up, tax sale investing is a business that rewards preparation. It rewards discipline. It rewards self-reliance. Shortcuts might seem tempting, but they often lead to very costly mistakes. Learn the business, put in the work, and take ownership of your success. Quit trying to take the easy route. This is not a get-rich-quick business. This is a business where you must invest in yourself, and when you do that, you will be deeply rewarded. Listen, that's all I've got for today. Thank you so much for listening to this episode of the Tax Sale Podcast. If you enjoyed this episode or watching this video wherever you are consuming our content at, please do us a favor and leave us some positive feedback, whether that's a thumbs up button, a 5-star review, or a positive feedback comment. It truly means a lot to us and really helps us out in the algorithms that put out our videos and our podcast episodes. And if you are ready to dive deeper into the tax sale business, make sure you check out our comprehensive training platform at taxsaleacademy.com. Hey, take care and make it a successful day. We'll see you next time right here on the Tax Sale Podcast. Bye-bye.